Bismillahirrahmanirrahim. Hello to all AFM students. I hope all of you are doing well. Hussain Qazi here. A very warm welcome to this live session. Very particular practice question live session. Exam attempt March-June 2025. Question name Sohbet Company. Sohbet Company. Topic interest rate risk management. Examiner particularly examine the 25 marks question with interest rate risk management. Difficulty level, I don't think that the difficulty level it's high level. It's between medium to high. In fact, some student apply calculation, it's very simple. And theory, I'm not saying that theory is straightforward. The context is straightforward, but you need to focus the requirement. You need to understand the requirement as well. So let's start this question. Before starting this question, I wanted to share the objective behind this live session. What the mindset I have. Yes, obviously, I will discuss this question, the calculation theory as well, but in a constructive way. What is the meaning of the constructive way? Number one, I'm expecting that you people have already attempted this question. If you haven't done that, pause this video, go back, first need to attempt the question, and then watch my video and refer my suggested answer. First thing. Because of that, I will discuss the question in a manner would examiner expect from your side. In fact, I will share the calculation and theory based solution including examiner comments diagnosis. So this is not a normal session like just attempt the question. No, a constructive discussion will be made that includes how to read question, even how to read question, how to attempt question. Before attempting the question, you need to plan it. How to read the requirement and brainstorm the point to reflect the answer according to the requirement. All these points. Examiner report diagnosis as well. What the student has made the mistake previously and what you should be aware or cautious or careful for your upcoming exam. So let's start. Student, if you are sitting in the examination hall and you're going to attempt the question, so the point is that the very first point from where you will start the question. Obviously, the first thing, bear in mind the planning phase. The 20% of your exam of the time must have to invest for planning, 80% for execution. One side 20% that's plan, rest 80% that is about execution. The point is done. So the point here, the planning includes three things. Reading is an art. Read the question. Understanding the requirement and the context. Brainstorming. Before attempting the question, you need to brainstorm. Don't start answer before brainstorming. Brainstorming means before starting, identify the key points. And then execute the question according to the plan you have made. So very first, if you attempted this question and you just quickly read the main content, for example here, the following exhibits available on the left hand side of the screen provide the following relevant to the question. Sohbet Company, hedging a transaction. So hedging, you At this point, you have identified this is a question about hedging. Then read the requirement. Calculate the expected result of using hedging method being considered assuming central bank rate base rate falls to 3.8%. So here the analysis only about falls. So first thing is that you have identified that this is something about interest rate risk management. First, identify that you have first you identified hedging. Number two, interest rate risk management. So first point is about calculation. Now need to focus 10 marks is about calculation. 10 mark because here the particular term used the calculations. Number two, discuss whether the traded future or options, traded futures or options should be recommended to hedge interest rate risk or whether Sohbet company should consider any other choices. So 5 marks is about what? Can someone reply me? 5 marks about what? 5 marks about what? What you people have done? Please do reply. Discuss whether traded future options should be recommended or whether the company should consider other factors. How you plan your 5 marks? Okay, you said that recommendation, and very brilliant student says here, sir, the 5 marks is about, it's not only about the recommendation of the future or options, but here also we need to mention any other choices as well. Means if 3 to 4 marks is about the discussion, future and options, 1 or 2 marks is about also the other choices like forward, like callers, like swaps. So that is about, you must be very much careful what examiner expect from your side. If any of the student just mention the recommendation about trade futures and options and ignore other choices, student actually lose the mark. Why? Because if you ignore any of the requirement part of the examiner and not able to mention with your answer, you will lose the mark. C part, compare and explain the relevant advantages of Sohbet company using over-the-counter option versus traded option of hedging this transaction. 5 marks. What's the requirement? Is this the requirement straightforward? The advantage of OTC option versus traded options. Is this just about the advantage? No. Here you have to mention advantage of one over other and also connect the point for the company as well, Sohbet company. If a student just throw the knowledge and not applies with reference to the company, student will get only limited marks. Rest 5 marks is about professional marks. Professional marks. With this particular question, we will also discuss the point of professional marks. For the calculations, professional skill marks, only about analysis and evaluation. Numbers. But for theory, all three component, analysis, evaluation, skepticism, commercial acumen, all three are important. All three are important. So let's start. Let's start. Let's start with the calculation, with the discussion part. There's a question from a student. Sir, is there any professional marks for calculation? Yes, yes, yes. The professional marks about calculation, number one, spreadsheet. Whatever the spreadsheet working you are using, presentation in the spreadsheet. Left side, the main content, right side working. Well labeled. Well labeled. Working number one, for example, something mentioned main working with the working one. So you have to, at right side, you have to mention the labeled working one for example, basis risk. Labeled. Well structured, labeled. Use the spreadsheet functions, plus minus functions, or other part of the syllabus, that's IRR function, NPV function, B sub calculators. So if you are working with calculations with these guidance, spreadsheet functions, well structured, labeled, so you're not just able to get technical, but simultaneously get professional skill marks as well. Okay, so let's continue the question. So first part, all of the students are, and it's not wrong, all of the students initially start the question with the calculation. 10 marks. 10 marks typically for calculation. 10 marks for theory. You have 45 to 50 minutes for 25 marks question. Make sure out of, for example, 50 minutes, out of 50 minutes, 10% means 10 minutes for good planning, reading, understanding, and brainstorming. Rest 40 minutes for execution. Make sure 20 minutes time for calculation here. Make sure 10 minutes for 10 marks, 20 marks. Oh, sorry, 20 minutes. You need to park your 10 marks. Rest 20 minutes, 10 minutes, 10 minutes. You have to invest for 5 marks questions for executions. 5 marks, B and C. So let's start. Let's start. With risk management, you can easily, with some standard type of working, I have referred with my question practice course a lot of times. With a standard format of the working, you can easily save your time and save your marks as well. So let's start. Very simple. Quickly, Sohbet company is planning to sell one of its office building, and invest the money from the sale in the new warehouse facility. Till now, if you're working for that, till now, one issue is still question mark. It's hedging, yes. Interest rate risk management, yes. But is this about borrowing or lending? The first line is start reflection is something about investment or lending. Okay, today is 1st April. Now is 1st April. Very important. Now is 1st April. Now is 1st April. Sohbet company expect to sell the production facility to be completed. 54 million received in 1st August. 1st August. So number one, now 1st April. Number two, transaction date. Transaction. Now 1st April. Transaction date. April, May, June, July, and 1st August. So April, May, June, July. 4. So that means transaction date After 4 months. From now, after 4 months. Now 1st April, transaction date 1st August. Duration, sorry, time period from now till transaction 4 months. This receive will need to invest until 1st December. So lending duration count. Lending duration August, September, October, November. 4 months. So transaction date after 4 months, 1st August. Duration from transaction date till December, 4 months. 4, 4. So if you are reading the question, very basic. Based on transaction date, you easily catch some main points. Number one, which contract? Which contract? Obviously, September contract. Obviously, September contract. Because at transaction date 1st August, so after 1st August, the nearest expiry date of the contract, September. Okay, September contract. Further, this is a case about lending, something very standard in your mind. Once you identify lending, some basic principle of futures. Here, September contract, that is about long position. That is about you need to buy the bonds, or buy, it's something about buy now, sell later. Buy now, sell later means long position. In the case of the put option, in this case of the option, that's simple, call option. So long position, buy now, sell later, and buy call option. It's very basic. Free marks. The date when the purchase of the warehouse is forecast to be complete. Now you need to read the point para very carefully. The central bank base rate is currently 4.5%, but has recently been volatile. Predictions suggest that central bank rate could fall. The lender has a risk about fall, and here analysis only about fall. Fall as low as 3.8%. So expected spot 3.8%. Now spot 4.5, expected spot 3.8 by 1st August. Sohbet company can currently invest funds central bank less 30 basis points. Spread is 30 basis points. When investment was discussed at the last board meeting, the directors indicated that they would like to achieve at least 4% annual return on the fund invested. This is a part of the question that is something about application or the case-based matter. This is not something about any previous question. Here, examiner mention or incorporate some case-specific issue that the company are planning to sell the warehouse and expected to receive money 1st August. That means after 4 months, and then spare the funds will be, that's actually the funds will spare, so need to deposit or need to earn the amount of 4% after August, 1st August till 1st December. Expected to earn 4% annual return on fund investment. They're expecting this. But that the hedging method choosing have a limited range of possible outcome to make cash flow forecasting more predictable. Once again, actually they wanted to invest this money once, that's $54 million for the spare time and get 4% return. But hedging method chosen should have a limited range of possible outcome. He knows that if we hedge this, if you are going to hedge or make a contract of hedging futures or options, we will have a limited range of effective interest rate, possible outcome, to make the cash flow forecast more predictable. So one point I must wanted to say that here, if we are working with future and options and identify the effective interest rate, we have to compare that effective interest rate with their wish, the highest जो है, with their wish of 4%. That's need to consider. Compare with this. If any of the student ignore this point, student will lose the mark. That's why I always say, read the question very carefully. Hedging the transaction. Sohbet company finance director is considering using traded options and futures hedge. Investment follows. 3 months futures, 500,000. Very simple, 500,000. You need to calculate a contract. Simple. 54 million divided by 500,000. But also need to adjust with a formula. We'll discuss. September contract 96.404, where we need to working. Future contract exercise price only one, that's 96. Premium in percentage, that's call option 0.193 September. Some standard point here. Some standard point here. The term offered, the terms offered on derivatives are based on central bank base rate. It can be assumed that futures or option contracts settle at the end of each month. That's the normal assumptions. Basis can be assumed to be diminished zero at contract maturity at constant rate based on monthly time interval. That means basis is reduced gradually. It can be assumed that there is no basis risk. There are no margin requirement. No basis risk, no margin requirement. Means basis, no basis risk means basis is reduced gradually. No margin requirement. Since the last board meeting, finance director receive a query from another director whether OTC over the counter should be considered instead of traded options. That's the requirement other parts. That's the requirement other parts. That's the requirement other parts. One minute. Yes. That's the requirement other parts. That's B and C. Director would like to know the relative advantage of each type of option. Okay. That's very important. Okay. So first what we need to do, that's we need to work out with the part A. Part A. And part A is about futures and options. If you work with the futures, the very first, what particular steps that you need to invest? Very simple. First, buy September futures long position, and I am highlighting here the marks as well. Once you mention buy September futures long position, you will be able to get 1 mark. Simple. Then contracts. What is about the contracts? $54 million divided by 0.5 multiply by 4 means duration. Duration of lending. Duration of lending means now is 1st April. You will collect money 1st August and invest it 1st August. So from 1st August to 1st December. August, September, October, November. by 1st December. 4 months. This 4 months is about duration. And 3 months is a standard. That 3 months contract. Standard 3 months contract. Contract 1 mark. Contract 1 mark. By September, future long position 1 mark. And quickly lock in rate. Quickly lock in rate. Number one, always attempt futures with commodities. September futures now 96.04. September futures now 96.04. 96.04. Basis is remaining. Basis is remaining. You need to work out for the calculation of basis risk as well. Whenever you identify there is a question about future or options, interest rate future options, you have to make this working. You have to work this working. Very simple working. Number one, spot now 4.5. If this is spot now is 4.5, it's given 4.5 here. And immediately reverse with the commodity 95.5. Futures 96.04. Here mentioned 96.04. Reverse with the futures. Very simple. 100 minus 96.0. This percentage you have to use for options and commodity use for futures. Always work commodity wise with futures. That's commodity means reverse working 95.4, 96.04, and percentage wise for futures. Oh, sorry, options. You have to make this a standard. Okay, this is the basis rate 0.54. What about the remaining basis? Remaining basis risk. Remaining basis is minus 0.45. Sorry, 54 divided by now it's 1st April. Now is 1st April. You have purchased a contract September, or you are going to purchase September. So now till September, April, May, June, July, August, September, that is 6 months. Divide, multiply by at the time of transaction. Transaction time 1st August. Remaining time August. August and September. August and September. Remaining time August, September. Remaining time 2. That's simple. Minus divided by 6 multiplied by 2, 0.8. This is the remaining basis. Very simple. Basis is remaining. 96 plus remaining basis is equal to 94, 95.86. Reverse interest rate means 100 minus this 4.14. Spread minus 0.3. Spread minus 0.3. Spread minus 0.3. So effective interest rate, if we move with futures, we will lock our position with the 3.84 per annum percentage, or you can calculate the amount as well, but this is good enough percentage. I'm repeating my point because the case is concerned about the returns. Here the company expected to get the return of the 4%. You need to compare 4% with 3.84. If the company moves on with the future contract, So the company will not able to get the return up to the mark, because by future 3.84% rate yearly, but getting expecting to get 4%, but nearby, but not exactly. That's the first thing. Okay, now the next one is option. Before moving to towards the option, one of the student asked, sir, please do repeat the number of contracts. The number of contracts. The number of contracts. The rule for the number of contracts, how to calculate the number of contracts. It's very simple. Number one, whatever the amount of borrowing or lending, you need to divide amount of borrowing and lending, divide contract size. Number one. Then you need to adjust one more thing. Then you need to multiply the duration. Duration means how much time you need to lend money. Duration of borrowing or lending. In this case, the duration is 4 months, because you will get the money by 1st August and invest till 1st December. And the contract standard time, that is 3 months. 3 months is a contract. Any contract you enter, June, future, September, that's by default, it's 3 months. So here the size is equal to 54 divided by 0.5 million multiplied by duration 4 divided by 3. That's 144. I hope it's clear. That's 150. Is this clear? Do reply me. So with these points, 1 mark, 1 mark, lock-in rate 3 marks. No extra working. That's all 3 marks. Now the next point is about options. Options. Number one, very simple, buy September call option. And the contract same above 144. Simple 1 mark. Premium, you need to identify the value of premium. Sorry, percentage 0.193%. And the point is that the next point that is about amount you need to mention. Even though you are working with calculation, but examiner normally have a behavior to determine the value of the premium as well. Very simple. 500,000 contract size, 144 is contract, multiply by 0.193%, and each contract by default size 3/12. Default size 3/12. That's all. 34740. That's all. 1 mark. Park 1 mark. And then evaluate. Evaluate simple. Exercise price. Exercise price 96. 96 means 4%. Estimated futures. Now the working you have already made about the estimated futures. Estimated futures. That's a basic working. Estimated futures use 3.62. 3.62. 3.62. This is 3.62. Estimated future 3.62. So you need to compare. If you exercise the option, that you will be able to receive 4%. But by futures, you just receive 4.6%, 3.62%. That means option having a value, having a gain, yes. How much? 3.38. Net outcome is spot, estimated spot. That's very simple. After adjusting the spread, that's equal to 3.5. You will receive 3.5 from a spot market. This is the option gain 0.38, and premium need to adjust, less premium, because here you need to pay premium. So with the tendency of received, that should be minus. Net outcome 1 mark. So that's total 8 to 9 marks you have to work out. And I must say, if you do practice in a standard way, in a structured way, and avoid any unnecessary working, you can easily work out this working. That's 9 marks or 10 marks. In fact, 9 to 10 marks. 9 to 10 marks with 20 minutes. Do reply me. Am I right? That's this working you can make within 20 minutes, yes or no? This working. That's why I always says, if you wanted to qualify your strategic professional level exams, always apply this formula. There are 2 variables. In fact, there are 3 variables. First 2 are, there are 2 variables to get success. Number 1, knowledge, and equal important exam technique. If the student have good knowledge, but don't have the exam technique, for example, performing the work, but attempting with unnecessary workings, attempting the question with unnecessary working, and invest too much time. Instead of 20 minutes, investing 30-35 minutes. So what will happen at the end of the 3 hour? Student not able to complete the paper. So that's why both are important. Knowledge of syllabus and exam technique. And number 3 is mock exams, self-evaluation. At least 3 mocks you need to attempt. 4th should be your exam. 1 ACCA pre-mock and 2 mock activity. That's you have to perform based on the past paper. Like whatever we did previously, the past paper based mock activity. If you haven't done that, please do it. Even me or my admin team regularly follow to you about the mock. Some of the people are very brilliant that attempt the mock and follow instructions, but some of the people least concerned about the mock and our messages. Okay. So there's a point, sir. How much marks? Actually, I must say here with the above point, the technical marks, that's about 10 marks. And the professional skill marks, there are total 5. Assume that if we allocate the professional skill marks, for example, 2 marks for calculation and here calculate 3 for theory. So here you will be able to get 12 marks. You not just attempt only the technical, but also the professional marks. Sir, what is about professional marks? Number 1, better presentation. At one side main table, second side working. Obviously this marks, this is not your answer. Number 1. Number 2, first thing is structure. Number 2, well labeled. For example, here working is about, you need to mention for working, basis risk and estimated futures. You have to mention. So if you mention that basis risk, you need to make a reference working. For example, if you mention estimated futures, that's about working. Although your cell represent that you identified from the relevant cell, it's better to working. Number two, you use the functions here, very limited functions. That's the functions, some function. So well structured, well labeled, using the spreadsheet function, that's you become able to get the professional marks. That's a point. Okay, so I have covered here the technical aspect, professional skills, all matters. There's a question from a student that says you shared a mock but third one incorrect. Okay, I will check it after this session and I will share once again the right link for the that's my debrief video of the mock. Don't worry. Okay, the next point, and that is all about the theoretical aspect. Discuss, as we covered previously about the reading, discuss whether traded futures or options should be recommended to hedge the interest rate risk, or whether Sohbet company should consider any other choices. 5 marks. I can add 1 more mark for professional skill marks, 1 or 2 marks for professional skill marks. So now we will here to cover what are the steps the student must have to follow to attempt well-structured technical and well-structured answer, including technical and professional marks. What the first thing, for 5 marks, you have to invest at least, if you have 7 to 8 minutes or 9 minutes, have to invest 1 to 2 minutes for good planning. Good planning requirement is very clear by reading. You have to mention here the conclusion or recommendation, recommend the future or options, and also consider other choices. So let's start. If you're sitting on the examination hall, the very first thing you have to work out about this. The brainstorm. The brainstorm. That's a very important point. What the point we need to cover here? Compare futures versus options, obviously. What is the right point to answer the conclusion or recommendation? Always start with facts. Always start with facts. Start with facts. Facts of the question. Fact of the question. Just take out the data from your calculation. What the calculation about? The calculation about, it's very simple. Effective interest rate with futures 3.84, effective interest rate with options 3.7%. So better and near to the target of 4%, it's futures. And this is the first point you need to write. That's futures and options, and preferably the futures. Although you have to mention not both actually meet the target, but futures having the higher receives. But this is not the complete recommendation. 2 things you need to notice that. If you say that preferably the futures, but the futures have some limitations, you need to critique. That's called skepticism about the bases. Whatever the calculation we have done based on bases. And we assume that there is no basis, but it may possible the basis moves not gradually. So the outcome will change. The things will vary. But on the other hand, if we control the game with our hand and move towards the option, do remember, if the option having lesser receive It's not possible to ignore, or you just say that if option is out of the race. Never. Because based on option, the game is under the control of holder. Means if favorable, exercise, not favorable, not to exercise, but having a limitation, premium. So start with future options, with facts, but also mentions skepticism critics. Other choices, that's a part of the question. It's mentioned. You have to incorporate FRA, swap, callers. If you incorporate other more practical points, more practical, FRA, where you are predictable, and in fact swap as well, you become predictable, but having the over-the-counter risk, default risk. So that means you're mentioning something practicality, something about the practicality. This is called commercial acumen. And then make a final wordings, recommendations. So this is the point. You have to write the answer accordingly. Like this. This is not the model answer. This is actually an answer that's student friendly answer. That's a smart answer for you, because student wanted to know how much should I write. You people are so much confused if you refer the answer. There are a lot of extensive material with the model answer of the Kaplan kit. This is what the answer I've made for you. You start with future options. Futures could be used, but they will not guarantee 4%. This is important, 4%. This 4% reference is important. If you ignore that, you will lose the mark. Because of basis risk, the future price may not perfectly with the interest rate. While impact is usually small, Sohbet company unlikely to achieve 4%. Here, you not only mention the futures, but also basically you have analyzed the situation. Analyze means, what is the meaning of analysis? Analysis means you have to get the facts from, listen carefully. Analysis means get the facts from spreadsheet, get the facts from question. You will get the fact from spreadsheet that future not guarantee the 4%. Where is this 4%? It's from the question. From where you get the name? From the question. Where you came to know that futures, it's not exactly the 4%? From the spreadsheet. You can mention the 3.84%. Options. Options provide flexibility. Not the futures. They need to be exercised if rates move with the Sohbet's favor. Move to the favor means if the spot market having the higher rate. Means you have a risk to decrease the interest rate, but in fact, what if the spot become increasing? But the point, premium cost reduce the returns and gives that rates are expected to fall. Achieving 4% return is less likely. Because of premium, you are not able to get the 4%. So questions, likelihood of hitting target with options. You are also incorporate skepticism. Skepticism means you are not only mentioning or referring the question and solution, but also critiquing. Also criticize here. Other choices. FRA could lock in fixed return. Provide great certainty. Go and get some customized arrangement. FRA. Interest rate swap or OTC options. Also give tailored protections. So other options that about commercial acumen. Because whenever you adding some alternatives, here examiner mentioned to adding some alternative. In future question, if examiner not mentioned, you have to add some 1 or 2 lines about alternatives, any part of the syllabus. Recognizing practical alternatives that aligns with 4% objective. Commercial acumen. Recommend. Between futures and options, futures are preferable since the outcome is closer, 3.84 is closer to 4%. However, this however is important. FRA swap may be more suitable if Sohbet requires some certainty. This is called final. The final statement is evaluate. Evaluate means your final wordings. But your evaluation is based on the complete above discussion. That means linked to the strategic aim. What is the strategic aim? 4% targets. I always say evaluation based on the above discussions. Evaluate means final comments, final recommendation based on facts of question and the spreadsheets, skepticism, commercial acumen, and then evaluate. The student, is this clear to you? What is the right way to draft this recommendation or conclusion? Can you please reply me? Is this live session worthwhile for you about the exam techniques and all these things? Do reply me. Thank you very much. Now, thank you very much, students. Now the next, one more thing. Here I have mentioned some examiner comments. We have already covered the marking split. Examiner reports some important points here. And these are the highlights that examiner criticized to the students now. And you need to be aware that. Number one, application to the scenario is critical. Link discussion to Sohbet's director requirement. That's very key because most of the time students don't do this. They don't connect with the case. Target return 4%. Candidates should complete hedge result directly to this target. Volatility in the base rate. They are concerned about the base rate become volatile, maybe increase or decrease. So that means option having the flexibility. And this will benefit in uncertain conditions. Alternative products must explain why they are relevant. It's not only FRA. And if some student mentioned that FRA or swap, it's also considerable. This is not the complete statement. The complete statement is this. FRA and swap may be more suitable. Maybe more suitable is incomplete sentence. If Sohbet company requires certainty. That's the examiner mentioning here with the report. Must explain why they are relevant. There's a question from a student. Sir, can we mention here internal hedging technique? Here, I must say that students try to be focused your answer, whatever the examiner mention. If examiner mention recommend, if examiner mention that other choices. So Here, more reflection about other hedging choices. Because the question context here, they have identified the risk and they have already moved towards futures and options. So don't move towards the internal technique. It's irrelevant here to discuss something. The technique is smoothing and matching, because here they have identified this transaction. This transaction after netting off and after matching off, after smoothing. That's why internal technique is not relevant here. Okay. So this point, students, have you picked the point? If some of the student only mention FRS swap, it's relevant. It's incomplete sentence. It's relevant because Sohbet requires certainty. That's important. Recommendation must be justified by result, not just stated. What does that mean? If you just recommend futures as acceptable, that's all. No. You have to mention between futures and option, futures are preferable because or since outcome is closer. If you just mention futures is preferable, you have to justify your answer. Justification is that because this is closer to 4%. I hope that you people are realizing that sometimes you just throw the knowledge in a way the sentence is incomplete and not connect with the case. Am I right? Am I right? Okay. Now the part C. Now the part C. Requirement. C. Compare and explain the relative advantage for Sohbet company using OTC versus OTC option versus traded option for hedging this transaction. Number one, what are the key points to consider? OTC, flexible size maturity, useful if cash timings changes. Very simple, basic advantage. Take out the mind, develop the mindset of basic. OTC advantage, that's flexible in size, flexible maturity. Here the question is about you will get the money once you sell the warehouse. Now is first, what they mentioned, what now is today is 4th April and you are going to sell your warehouse. You will get the money first by 1st August. It's very neck to neck. Maybe possible that actually the transaction of sale of warehouse having a different the variation with the time period, not in the 1st August, maybe the 15th August, maybe the early of before the August. It's maybe possible, but right now if you enter with the hedging technique, with the tradable hedging technique, based on these dates, the fixed dates, so you will become lock. But the point is that over the counter, maybe you have to add some margins, not exactly the transaction date 1st August, maybe the 10th August, 15th August. So you have to make a contract right now and lock the dates, but with the flexible dates. Flexible means some date other than exactly the standard market dates. So OTC is flexible in size, maturity, and cash flow and cash timing changes. Traded are very transparent pricing. It's a marketable, easier to sell and more regulated. Applied to the company, Sohbet's company transaction, receive funds and timing uncertain. Conclude with which better fits Sohbet company. We are not exactly say that this one is better, because here it's not requirement, it's about recommendation. It's not about the requirement recommendation. It's only about compare. So it's very simple to answer the question one by one. Start with over the counter. OTC option can be negotiated to match exact size and maturity of the Sohbet's expected receipt. So exact size. This flexibility is useful because cash inflow date may change, a longer maturity are easier to arrange compared to traded options. This tailoring helps ensure hedge is closely aligned to Sohbet transactions. This statement is important. Refer to the case. This tailor aspect, that's the reason of the tailor, that's support to the company. Professional skill marks, that is commercial acumen. Commercial acumen means the practicality. The flexibility is the practicality. Traded options. Traded options are available on exchange with transparent pricing, because tailor-made pricing is a customized. Standard pricing is open for all. It can be sold tradable if no longer needed. Benefit of exchange regulations. Exchange regulations means there is no chance of default. So Sohbets are more secured as compared to OTC. With the OTC contract, the writer of the options may default. And traded options are American style. American style means you can exercise and exit anytime, which could be valuable if timing of sale is uncertain. Analysis, linking feature to protection and flexibility. Comparison and application. Now you have mentioned the benefit of both. Now need to compare. Overall OTC provision customization better for Sohbet transactions. However, traded options offer liquidity protection against regulations, both having advantages. And the choice depends on the company's Sohbet's value of flexibility. Either they prefer the flexibility, tailor-made contract, or they need to prefer security. Flexibility or security and transparency traded. So we cannot recommend. We just mentioned that these are the factors to consider to make decision. What is important for you? Flexibility, so go. If flexibility is more important than security, go for OTC. But if you are more concerned about security, so compromise the flexibility. Go for traded options. So that's the point. Here examiner, key points. Many candidates, examiner comment, many candidates were confused about OTC market and mixed with futures. No, here examiner very categorically mentioned options, over the counter option versus traded options. Options, OTC options, marketable. It's not about the futures. Some wrongly assumed no premium on OTC. No, every option contract, either over the counter or customized, or over the counter or marketable, you have to bear premium. Premium exists, not just exchange traded. Candidates listed advantages and disadvantages, but did not explain to apply them. If you do that, Out of 5, you just able to get 1 mark. And after the exam, you will say, I did complete question. I did attempt 100%. But if someone asks you, did you attempt according to the requirement? Then you reply, I don't know. Next point is very critical. Disadvantage of OTC. It's not necessary that automatic advantage of traded. If you mention that one OTC having one disadvantage, assume that other one is disadvantage. No, you have to mention OTC disadvantage independently, advantage of traded independently. Each point needs full explanation. A strong answers are related to the scenario. And here the scenario is about uncertain timing of the cash flow. Students, this is all over from my side. The discussion was not only about to attempt question, as I said start of the question. The discussion is about the right technique to attempt the question, either calculation theory, including technical, professional, all marks. Planning is key, includes reading, understanding the requirement of the examiner and the content of question, requirement, then execute. Brainstorming, once again, planning includes reading, understanding, brainstorming, then move on for the execution. Focus on quality work, not the quantity of the questions. Is this clear? Thank you very much, student, for this session. We will meet with the next session with the next practice question. Thank you very much. Take care a lot.